Breaking nuclear news. First up, price action. The Sprott Uranium Miners ETF down 3% on the week. The broader S&P 500 market also down about 3% on the week. So every single asset class bruised and beaten in this high interest rate stagflationary environment. The real question is, what are you going to do about it? You can sit on the sidelines, or you can pick up some of the highest quality growth assets for the long term. Obviously, staying hedged is important, maybe a 1% short position just to ride out the volatility. But in the meantime, we dive into the fundamentals of revolutionary asset classes. So let's dive through the uranium space and what is going on. We are in the midst of a nuclear renaissance in Europe and around the world. But first up, Europe. Russia-Ukraine war evokes Europe's privatized nuclear renaissance. Over $400 million raised. Even before the end of the year, over $400 million has been raised in 2022 by nuclear startups in Europe. And so we have a reemergence of nuclear energy in Europe. France relies heavily on nuclear energy with its 56 reactors supplying around 70+% of the country's electricity, yet roughly $50 billion will be spent by the French government on 6 new reactors. German officials recently changed their minds about keeping their vow to phase down nuclear power by the end of the year and decided to run the remaining units into April 2023 instead. And so that is the backdrop of the nuclear renaissance just quietly unfolding in Europe. And then we have something very rare for Europe: bureaucratic regulation going down instead of up. And there's a reason why it's happening in this crucial field, this revolutionary energy source. French government aims to cut red tape for new nuclear reactors. This surprised me because you very rarely hear anything regarding regulations or red tape being cut in Europe. But here we have it for new nuclear reactors, rolling out the red carpet for this revolutionary technology. This draft law responds to the urgency of the crisis, government spokesman Olivier Véran said after a cabinet meeting that adopted the draft bill on Wednesday. President Emmanuel Macron has put nuclear power at the heart of his country's drive for carbon neutrality by 2050, with plans to build at least 6 new reactors. And so that is just a glimpse into Europe. Obviously, it's a fact at this point that there's a nuclear renaissance going on globally. Let's look at the USA, right? The world's biggest economy. The US UAE, United Arab Emirates partnership to accelerate transition to clean energy, doing everything they can possible, these big governments, to usher in clean energy. The partnership is set to catalyze $100 billion in financing, investment, and other support to deploy globally 100 gigawatts of clean energy by 2035. This comes from the White House, by the way. PACE's ambitious plan is built upon 4 pillars: clean energy innovation, deployment and supply chains, 2, carbon and methane management, nuclear energy, and industrial and transport decarbonization. This stuff gives me the goosebumps because you get to front run the market picking up on this news. And remember, this is all at the exact same time that a supply demand crunch is going on. The above ground supply of uranium is not enough to meet this demand. And then you have big accelerants like this, which involves huge governments starting to put all their weight behind pushing nuclear power. Now, this speaks to the shortage in above ground uranium supply. Kazatomprom warned that shortages of materials led to production shortfalls and that delays in commissioning new well fields has led to lower capital spending and postponement of mine development, expected to negatively impact 2023 and 2024 uranium production. So the last time we had a massive spike in uranium prices, Kazatomprom flooded the market with supply. Well, that's not happening in 2023 or in 2024. Does it get much bigger than this? I don't think so. Not in terms of uranium supply demand fundamentals. So that's all going on in the backdrop. We have a scarcity of supply above ground, but let's continue to move around the world as we look at governments putting all their weight behind pushing the mass adoption of nuclear power. Canadian government recognizes nuclear as clean energy. The federal government's inclusion of small modular reactors amongst clean energy technologies eligible for a new investment tax credit has been greeted as a clear signal that it considers nuclear power to be clean energy on par with all other low carbon technologies. If you ask anyone how bullish they are on solar, wind, renewable technologies, they're going to say it's the future, right? Well, nuclear power is now on par with all other low carbon technologies. And we have small modular reactor technology that is just juicing the mass adoption of this power source. It is what it is. The news speaks for itself. Moving back to Europe, we have great nuclear energy news from Poland. They've agreed to build 4 nuclear reactors with South Korea, days after agreeing to build the country's first nuclear power plant with the United States. We covered the fact that they were building the first nuclear power plant. Well, lo and behold, they're building 4 more, right? So it's an exponential growth curve in what is going on. Moving back to the US, Constellation to seek license extensions for 2 of its zero carbon nuclear plants in Illinois. The Dresden and Clinton plants, which were saved from early retirement by supportive state and federal policies, are now seeking approval to operate 20 more years. So not only do we have new plants being built, but we have plant extensions happening all over the world for good reason. Why wouldn't you when you know the governments are supporting you? And you also know that this is a revolutionary fuel source that is much better than almost any other fuel source out there. Now let's dive into the underlying mechanics of nuclear fuel uranium contracting, right? So let's dive into the mechanics of what is going on. Nuclear utilities used to holding the whip hand in contract negotiations are sleepwalking into a similar situation to battery and EV makers who failed to see the signs of this year's lithium boom, a leading uranium executive says. Former Paladin and now Deep Yellow boss John Borshoff, who presented along with a number of industry players at today's International Mining and Resources Conference in Sydney, told Stockhead the balance of power would begin to shift to miners as utilities short on material are forced to lift their contract prices to bring on new production. Their unwillingness to ink deals at prices to incentivize new mines mirrors lithium, according to Borshoff, where converters and battery companies in China have seen prices climb 10 times over in 2 years because they failed to invest in new supply during the downturn. The market controls it, not what utility thinks or the battery maker thinks, and the supplier and the consumer is dictated to by a market that references supply and demand. That's why I think they can't hold off much more. They've held off. They thought there'll be some sort of relief happening, but it's not. We have an exponential move in uranium prices coming, according to this industry insider. Borshoff said the top-down shift to prioritize sustaining and financing nuclear from nations like the US, UK, Europe, and Korea would incentivize investment in uranium. Prices on the lightly traded spot market have lifted from the low US 30s to the low US 50s per pound over the past year or so. Where the uranium market is at this moment, it's way below water for all the industry, for all projects. It has to be in the 60s and above. Even Cameco boss Tim Gitzel says that. So I'm not going to burn reserves to keep utilities happy. He's not selling his uranium for anything less than what it's actually worth. That's been happening for 20 years. So I think that there will be no sensible new developments and capital deployment into this really quite stressed supply sector that exists today, unless it's $60 at least and probably higher. This comes from Alligator Energy CEO Greg Hall. Hall said major investors, some of whom either saw the uranium market as too weak or taboo to invest in previously, were increasingly pivoting to the sector. So we're seeing not only from the ETFs like Sprott, but also the direct fund investment from institutions into uranium. Again, they know as much as we do about the nuclear market, the changes in sentiment in Europe and changes in the US. He thinks the 50% rise in spot prices since the middle of last year is just the start. People are going to be shocked where this is going to go. And it's because there's been a dearth of investment in true uranium exploration in the industry for decades. Decades. It's a long time. In Australia, since 1991, we've only made a handful of discoveries in uranium. You can count them on less than half a hand. We are literally benefiting from the effort of crusty geologists being in the desert 50 years ago. We need that phase again, right? We need to get the crusty geologists back out there to find the next generation of mines that are going to be needed in about 10 or 15 years' time. And so this speaks to the underlying cash flow movement, the contracting cycle, the confluence of events, the perfect storm behind the uranium and nuclear fuel market. We will continue to cover this market.